So the month is over and we have the S&P 500 closing with a hanging man candle. However, is that bearish or is it actually bullish? We look out here and now we've had 1, 2, 3, 4, 5 consecutive up days in a row in the markets. So are we going to get a pullback before the markets go ahead and try to make a new all-time high? So on Friday, on Black Friday, the markets were trading. We saw all the indices in the green. And we look at advancing issues versus declining. We had 61.3% of issues advancing on the day. Now, as we come over and look at the sectors across the board on Friday, healthcare was the only sector in the red. However, when we come over and look at the 1 week performance, every single sector was in the green. No sector was left behind. Now, some sectors did do better than others. However, they were still all green for the week. Now, what's funny about this is as the market's still near all-time highs, it really threatened maybe this week or next week to make a run to all-time high. Notice the fear and greed index, we are still over into fear with a reading of 24. Then as we come over and look at the most recent investor sentiment survey, we can see the bullishness drop down from 32.6 down to 32. So it dropped by 0.6 to the downside. However, we look at the bearishness, it went from 43.6 dropping down to 42.7. So the neutral category gained the difference between the two, rising from 23.9 to 25.3. So now over the weekend, we're going to be hearing a lot about Black Friday sales. We see this article right here from CNN. K-shaped economy and inflation boost Black Friday sales by 4.1% from last year. Online spending jumps to 9.1%. Now, if you guys were out there shopping during Black Friday, let me know in the comment section down below. How were the crowds? Was it a madhouse out there? Or do you guys think that the consumer is definitely slowing down? Now, something this article does go on to say is it talks about maybe that 4.1 increase may have only been by about 1% due to inflation. Now we come over and look at the 10-year versus the 2-year yield. What do we see? Well, we see that it keeps trying to grind on the way up here just a little bit. So this is something we most certainly want to pay attention to. Now, when we take a look at the yields, keep in mind, we are only 10 days away from the next FOMC meeting. And as we go ahead and look, the market is pricing in an 86.4% chance that Jay Powell and company will be cutting rates. And it wasn't too long ago, I think like a week ago or so, we saw this was below 50% that the Fed was actually going to be taking action. Now, if we come over real quick, we look at the Dow Jones First to Transportation Index. Now, we talked about this last week, and last week we talked about breaking above this declining trend line, and we can see the transportation index actually building on that. We can see the Dow is within the wick of the candle that was able to form an all-time high. Now, if we come over and look at the SPY versus HYG, and let's just zoom this up here just a bit. And I want you guys to pay very close attention. Notice as we had a high up here, all-time high, we had a lower high, and then now we're very close towards that same area. Well, if we come down here and we look at the HYG, which is high yield bonds, notice we had all-time highs and we had HYG at a high. Now, on this second high where we had a lower high in the markets, HYG high was substantially lower. However, now we can see HYG is substantially higher than the high near that swing point that we saw over here on the S&P 500. Now, a lot of people are trying to make some comparisons and drawing trend lines out here and saying, oh, here we go. We have a trend line. The trend line's been broken. So now the market is back in an uptrend. And I'm going to caution you guys on that. And you guys will see what I'm talking about as we progress through this video. So now we come over real quick and we take a look at the monthly charts. And here's that hanging man candle that I teased about during the opening clip. And notice the MACD indicator is at a new high. So we no longer have any type of MACD divergence up here. But as we look at this candle count, notice we've had 1, 2, 3, 4, 5, 6 consecutive green candles, but we've actually had 7 consecutive months where we closed higher. This last monthly candle just barely closed higher than the prior month. And pay attention, earlier in the month, we did see that we were able to take out the low from the prior month, and then it ripped right back up. I know a lot of people say, Mike, this is absolutely bullish. We are never going to get a pullback. Well, if we just throw on some moving averages real quick, I have a 50 and 200 period EMA. Notice how far away from the 50 period moving average we are at this current time. Just like over here, we get too far extended away, we come back towards the 50 period moving average. And just to put some context on this real quick, we look at the closing price on Friday down to roughly where the 50 period moving average is. That is a 20% pullback in the S&P 500. Now, I'm not saying we're going to make it all the way down here this month, but it most certainly is something that we need to consider. We come over real quick, we take a look at the weekly chart. What do we got going on there? Last week, very bullish looking candle. We opened up near the low of the range, closing all the way right up here near the highs. But look down here at the MACD indicator. As we are pushing back up, the MACD indicator is starting to set up some divergence within the indicator. Then if we look right here, we have a high volume node at about 663.73. Now, a lot of traders say, Mike, we're not that far from all-time highs. We're probably going to run up there and go ahead and test that out. Well, if we go ahead and we draw this out real quick, we grab the Fibonacci retracement, swing high, right down to the swing low, and we have been able to violate the 78.6 Fibonacci retracement levels, which does increase the probabilities that the market will make a new all-time high. However, will we maybe get a pullback first, which could set up some type of ABC pattern that then takes us through those all-time highs? We come over, look at the daily chart. We had that 1, 2, 3, 4, 5 consecutive up candles in a row. And if we look at this week, it was on very, very light volume. Notice on Friday, we gapped up. We did not fill the gap. Wednesday, we gapped up. We did not fill the gap. And even on Monday, we gapped up and we did not fill the gap. So just in this little push on the way up, we've had 3 gaps in that 5 candle sequence. And I kept warning everybody, if we get above 50% of this nasty down candle, we are likely going to undo that candle. Now we've been able to come all the way back up here, closing this gap. But if we look left, let's not forget, we still have another gap up higher. And let's talk about the trend line real quick that a lot of traders are talking about online. They're like, oh, look, we have this trend line. We spiked above it on Thursday. We spiked above it on Wednesday. Friday, we opened and we closed above it. However, that might not tell the whole story. I'm not a big believer in actual trend lines, but what I do want to see is, can we get a closing price above the swing high right over here? That's going to be a price point of 654.96. If we can get above that, that's where I'm going to change my tone and I will aggressively start trying to trade back up towards all-time highs. However, in the short term, I want to see if we can come back, start filling these gaps. And one of the areas I do want to focus on to the downside would be right here at about 671.93. It's a high volume node within the composite profile. We can also grab a Fibonacci retracement from the swing low right up here towards the swing high, and notice that's right around where the 38% level comes into play as well. Now the 38% level, now the 38% retracement would be a minor retracement in what could still be a very bullish move in this market. Now, before we go over and take a look at the GEX levels, I want to let you guys know right now, Apex Trader Funding drops a major sale, 80% off all evaluation accounts, $40 activation fee. But wait, if you like to trade the 100K accounts, you can get that account for only $59.40. Best yet, that account only has a $10 PA fee. Take advantage of this offer. Use the link in the description box down below. Use promo code Mike at checkout. Now we come over and look at how the CTAs are positioned for the S&P. We can see they did have a little bit of a rally up this week. However, I still think they're going to start to roll over. They most certainly are lagging price at this moment. So are we just waiting for a price to go ahead and take a swoop down and catch up to how the CTAs are positioning? Now we come over and look at the gamma exposure levels real quick for the S&P. Notice we have more gamma exposure to the upside. The first area is going to be right here, right around 685 or so. We really start breaking above that. That nice 700 price point looks very, very enticing. That would kind of correlate roughly 7,000 on the S&P cash market. So if we look at 685 real quick, where did we actually close at? And we can see we closed at 683. So to think that we're not going to see some type of pullback around this area, I do think is a little bit foolish. However, if we can start clearing that 685, the next area I want to watch is going to be right around 690. Then above 690, I want to go ahead and focus on that 700 strike price. Now, if we look, 700 strike price would be at a position where we see the market's making a new all-time high. Now, if we come over and look at the 4-hour chart real quick, 4-hour chart, MACD still looks extremely strong on the S&P 500. We drop down and start looking at the 30-minute chart, and notice as we were pushing up on Friday, we're starting to get some MACD divergence on the 30-minute time frame. And on Friday being a shortened day, we have a D-shaped profile, very small range in size. However, if we start breaking below value area low, I want to target kind of this minus development area that formed on Wednesday, about 679.53. Now, when we come on over and we look at the futures markets real quick, I want to start off looking at the weekly volume profiles with the 4-hour candles. And the first area that really captures my attention is this untested point of control that we have right above us at 6873.25. Now, I'd love to see that the market go up there, rip, take it out, and then come back down. But the second area that really has my attention, look right down below us, 68.05 and a quarter. That is an untested value area high. And what I mean by that is anytime the market closes outside of value, I expect the next 1 to 2 sessions, we will come back and visit that level. Well, since we're dealing with a weekly volume profile, one session in this case would equal 1 week in time. So either this coming week or the following week, I would suspect that we'd come down here and test out that level. And given the fact that we've rallied so much with very little pullbacks, I do think it's going to come sooner than later. Now, if we start to pull back before we take out the high on Friday, notice where that 38% retracement is. It's all the way down here near the weekly point of control at 6723.25. We have the weekly value area low all the way down here at 6627.75. I'm not really concerned with that right here at this moment. But some other areas we really want to focus on, especially when you look at this profile, is right here. Look, we have a minus development area right here about 6823. Then below that, I want to turn my attention towards the untested value area high. And then we can look at some of these high volume nodes as potential targets as well, 67, 69-ish. And then below that, we kind of have this whole minus development area kind of right above where that 38% retracement is at this moment. Now, I do want to caution you guys, if on Sunday or Monday or anytime early in the week, we go ahead and we start pushing on up, we're going to have to grab that Fibonacci retracement and just simply move it up. Right now, I don't have enough conviction that this is going to be the turn point in the market. Now, we come over and look at the daily volume profiles real quick. Notice we have 2 untested point of controls below us. The first one, 6828.00. The second one, 6768.00. And when we're dealing with the 30-minute volume profile, unlike the SPY, we did not close above value area high. Now, value area high off the daily came in at 6861. The point of control, 6852. Value area low, 6846.00. Now, what I would love, my ideal setup come Sunday night or even early Monday, would be the fact that we go ahead, we break value area high, and then we start coming down, because then I can look to play the volume profile rotation down off these daily profiles. And then from there, I can start to really focus on some of these other downside targets that we talked about off the weekly volume profile charts. So when we come over and look at the economic calendar, do we have any big catalyst out there? Monday, we have ISM numbers coming out. We come over here, look at Tuesday, no major economic news. We look on Wednesday, we have the ADP non-farm employment change. Then on Wednesday, we have ISM services PMI. Thursday, we have the weekly unemployment claims. And then on Friday, we have the core PCE price index. So I do not see any NFP data. And I think they actually alluded to that earlier. Let's go ahead and check the next Friday as well. So it looks like we're going to be getting zero jobs data once again. Now we come over and look at the dollar index. Dollar index this week, kind of having this double top-ish looking pattern. However, it's not truly a double top until we break below 99.01. However, don't tell gold about that, because we look at gold out here on the daily chart. Gold is right here breaking above the swing point there, basically setting up an ABC pattern to the upside. Now that target is going to be 43, 43.9. And we get that close near all-time highs. Is it really that far-fetched to think we'll see gold making new all-time highs? Because if we come over and look at silver futures right now, silver futures this week making another new all-time high. We come over and look at crude oil real quick on the daily chart. What do we have? Crude oil has a shooting star type of candle on the daily chart. We had this little consolidation. We spiked above it. We came right back down. And to me, this is a clear warning sign. Weaker crude oil basically signals global economies around the world just simply cannot keep up. Now we come over and look at the Qs real quick. Let's start off looking at that monthly chart. Just like we talked about with the S&P 500, we have what could be a hanging man candle. And with the hanging man candle, we must get below the low of last month to essentially confirm that candle. Now, something I've noticed over time is when we get these hanging man candle, quite often we'll see like a shooting star candle right after it or right before it's actually going to work and come back down. And with the hanging man candle, it is the weakest of all reversal patterns. MACD indicator does have a bullish cross. We come out here and we look at the EMAs, we are well above that 50 period EMA. So to think that we can come back and maybe test that, I don't really think that's that far fetched. We dive down and we start looking at the weekly time frame real quick. What do we have going on? Very bullish candle out here last week. From the low, we closed almost at the very tippy top. But look down here at the MACD indicator. As we're pushing up, we're starting to set up some MACD divergence. And notice the Qs are a little bit further away from all-time highs than what we actually saw with the SPY. Now, when we dive down and start looking at the daily chart, we've had 5 consecutive days going up. And notice we do have some unfilled gaps down below us. We have 3 unfilled gaps, just like the S&P 500. Notice also the MACD indicator has not crossed back above the 0 line yet. We do got to cross of the 2 lines, but we are not back above the 0 line. So is this just going to be a fake out and we simply roll right back down? Well, if you think that, first we would want to pull a fib from the swing high right here, right down towards the low. And notice we are accepting price above the 78.6, which increases the probabilities that we are going to come back up and retest this high. Now, do we just do a look above failure and then we start to pull back on the way down? I would not be the slightest bit surprised if that's how this plays out. Now, if we come over real quick and we look at the gamma exposure levels, notice we have a lot of gamma right up here, right around 620, and a little bit below that, probably right around 615-ish or so. And then to the downside, we have quite a bit of exposure down there as well, coming in down here about 590. Now, the way I'd want to play this would be if we really start trading below 609, that's when I'd want to turn my attentions maybe down towards 600 and then down towards that lower price point at about 590 or so. And if we look at the closing price on Friday, we closed right there at 619 and a quarter. So as we can see, we are not that far fetched. We are not that far away from 620. Now, this is where I'd expect them to hedge. If we start getting above that 620 price point, that really opens the door right around 630 or so, this next gamma exposure level. And if we look, 630 would not be enough to make it to all-time highs. It would actually be just shy of filling the gap that we had where we came right off those highs. Now we come over and start looking at the 4-hour chart. MACD indicator does look strong on the 4-hour chart. However, something I do want to do, I want to grab my Fibonacci retracement, start off from the low, measure up towards the high. Now this week, if we do go higher, we will have to pull this up here just a bit. But for the time being, since this is the high that we're dealing with, look at where that 38% retracement is, right down there at 604. And if we overshoot it a little bit, that would be enough to get us right down towards that gamma exposure level at 600. But I don't want to focus on that level until we start really breaking below 609. That's when I'll get really interested in some of those lower levels. Now, at some point, we will start a retracement. A 38% retracement would be a minor retracement. If we just come down anywhere between the 38% and 61.8 fib level, that could basically just set up an ABC pattern up that could potentially take us back towards all-time highs. If I grab my Fibonacci extension tool and we just role play this out, if we come down to a 38% retracement, well, if we look up, that would bring us back to all-time highs. If we pull that down to the 50% retracement level, that still would be enough to make new all-time highs. And this is what you want to see. You don't want to see a market that just keeps going up, 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 up without any type of pullback. If you're wanting to get long, you would actually be you'd be very happy to see some type of pullback. So then you could get long and play for all-time highs. On the 30-minute chart, notice we were closing well above value area high. And on Friday, we really closed right near the highs of the session. But again, look at the MACD indicator. Is the MACD indicator at recent highs? Absolutely not. Now we dive down and start looking at the futures markets real quick. What do we have going on? We look over here at the 4-hour chart and notice we have an untested point of control on the weekly time frame right above us, right around 25,611.75. And also, like we talked about with the S&P 500, notice we did close above value area high at 25,245.75. Now, since we're dealing with a weekly profile, the rule behind that would be that normally within the next 1 to 2 weeks, we are going to come back and revisit that level. Now, I do think this week coming back to it would be ideal, but we'll wait and see what the market has in store. If we go ahead and pull a Fibonacci retracement from the swing low right up here to the current swing high, and keep in mind, we go higher Sunday night, Monday, whatever, we'll have to grab and adjust the Fibonacci retracement up. But right now, that 38% retracement still comes below the point of control off the weekly time frame. Now, if we were to go ahead and make it up towards this point of control before we pull back, notice that 38% retracement then would be just above that point of control on the weekly time frame at 24,934.25. Now, if we start breaking below that, could we potentially get a full rotation all the way down the value area low at 24,578.75? Now, we come over and look at the daily profiles on the 30-minute chart. We have a huge gaping untested point of control below us, 25,300.75. Now, I wish I would have had a little bit more courage on Friday to hold the trade out. We kept talking about 25,500. We had a GEX level up there. It was probably going to go up there. And what do you know? I get out of my trade and the market runs all the way up there. But notice, unlike the S&P, Also, on the daily time frame, I'll zoom this up here just a bit. We also closed above value area high. So just like we talked about with the weekly profile, since this is a daily profile, the next 1 to 2 sessions will either be Monday or Tuesday. We should at minimum be able to come back and test that value area high at 25,434. Now the point of control will be 25,405 and value area low will be 25,369. Now, even though we're talking about some of these lower levels, the level I do not want to focus on would be the point of control or lower unless we get back below value area high. And this is a target I will likely focus on either Sunday night or maybe even Monday during the live stream. Now, something we do want to pay attention to, we have a huge minus development area within this profile, anywhere from 25,464 and a quarter down here to about 25,440.25. Now, the reason why I say pay attention, quite often, the first time we come into it, we reject back out or we'll consolidate within that area. Now, there are times where we just slice right through it, but I would not be surprised if we come down towards it, we spike back up before ultimately coming down. Keep in mind, we do have that untested point of control above us at about 25,611.75. So do we come down towards that minus development area and then bounce, run up and hit that level, and then come down and start working on some of those lower levels? Now, if you guys are thinking about trading with Apex as they have a massive sale going on right now, but you're worried about getting paid out, then you need to make sure you watch this next video right here.